Well, Bitcoin's down another $5,000 after Jerome Powell cuts interest rates, kind of unexpected to the retail trader, expecting very much that prices were going to increase now that we're seeing more money come out into the market. Is this just a temporary measure on the downside before we see further upside? Let's discuss that in today's video. It's your home of macro cycle analysis. Hit the like button, subscribe to the channel. I'm doing daily videos here on the markets. And of course, the big one, the 18-year real estate cycle, which may have topped. But more on that later. The Fed has cut interest rates by 0.25%, now down to 4%. This was basically expected by the market. The forecast was it was going to be cut. The actual obviously came out that it was going to be cut. And now we await further economic announcements, providing that the Fed gets the information come through from the government because, well, the government in the US is still shut. Now, a few other things happened overnight. Obviously, gold is down again, still underneath 4,000 an ounce. But the big one was Nvidia hit $5 trillion, the first company in history to hit $5 trillion. Now with two others joining in the $4 trillion being Microsoft and Apple. And it was only several months ago that Nvidia was the first one to hit 3 trillion and then over to 4 trillion and of course now 5 trillion. So obviously things are a little bubble-like in the AI space, but we're not trying to short the market when it is going up. And that's looking at tech specifically. Now, in terms of Bitcoin, still sitting here around 2.2 trillion, $110,000 with a low there of 109. And when we take a look back to the previous peak in January, basically 10 months ago, it was also at $109,000. So in this entire period, we've seen some pretty significant volatility, which is typical of the end stage of the cycle. And of course, that can be in all cycles. You've got the 18-year real estate cycle. You've got the stock market cycle with volatility. We saw in yesterday's video looking at those $100 billion swings for stocks. And of course, Bitcoin as well, as it's led into this historically final year of its 3 years up. Now, I'm not trying to call the end at all. We're just going to look at the data points. And of course, everyone makes up their own decision. It's your money at the end of the day. What we've seen in this period, now that we are approaching the exact 3-year mark for the bull market, the low of this cycle was November 21 at around $15,500. So we are very much deep into this cycle. And the top at the moment is the 6th of September. So essentially just short of 3 years to get to that top. Now, it hasn't been confirmed yet that that is the top, but there are some signs that are looking a little shaky at this point. Even if the market just wants to take a bit of a rest, absolutely okay. The sentiment has continued to stall here. It's back into fear after Bitcoin dropped $4,500 from the top to the bottom. And of course, end of the day, nearly $3,000 down from yesterday's close. We've now seen 2 down days, 3 red days, but that's not an issue considering where the market sits. It has been rejected from the 50% level and has not recovered from there yet. This is the 50% at 115. Remember, that is the key level for the short term that we want to see Bitcoin recover above. So at least it has something left in the tank before, quote unquote, time runs out for Bitcoin in this cycle. And of course, that's a level there, 115. The tops back here were 118. And if we zoom out, you can see just how significant that level has been throughout this entire period when Bitcoin broke back above $110,000 in July, running into that top, obviously another top, and then our third top here, and the price is now sitting underneath that level. So if we extend this out, that's basically that 118 level that we're watching, and day by day, the 7-year resistance line gets further and further away. Take a few lines off the chart here. That is that one on the diagonal. So we're still further away from that, and as every day goes by, that number is getting higher and higher. If it was to happen today, now we sit at 119,000, and in a few more days' time, it's going to get close to 119,500. That's in the early part of November. So really, it's got to get a move on, as we've been talking about this week, or at the very latest next week, in my opinion, especially if it is going to have anything of substantial, any sort of substantial move to the upside. The good news is it's still holding above 108. So literally up, down, sideways. Go for gold in the comments section. That's usually the case when people are looking for answers. Right now, the market is not giving us any answers. It is going between the trading ranges. It's literally doing that thing, and we don't have any answers. When we get to see a turning point, in my view, my analysis is going to come above that 115. Then we'll start to see whether it's got anything left in the tank to go through the 118, the 120, and then of course we'll worry about the all-time highs after that point. Otherwise, we've got to look to the downside as well. Breakdowns of this now, this level here at the shorter term 50%, this double top 110, and the lows here that have been in play for a couple of weeks, coming up to a couple of months now, back in late August, early September. That's your 107, 108. So it's on very thin ice, as we've basically covered for quite some time. And then to the downside, this is where things, I think, really start to break. That is your 98 to 100K level, and it brings in these paths into hopefully another cycle. If it breaks down from where we are, I think we run into a significant-ish lower high. If it's able to hold, no more lows from this point, no more major lows, then we have the opportunity to run in to a new all-time high. So that there's no confusion, the big number for me is the breakdown of the support, 98 to 100K. That's going to give us a, in my opinion, most likely lower high to be formed over the coming weeks or months. Hold this level now, hold this 50% at 100K. Then I think we still have a possibility, a chance to get back to those highs, even though there's not much time left in this cycle. And if it is able to do that, hold that 110, then the price targets still remain. I've got the closest one here is still in the mid 130,000s. Just looking at a number of these extensions. Now, if I chuck them all on the screen, things get a little messy, so I'm not going to do that. We've looked at it before in previous videos, and it's just looking at price clusters given to us by the market using previous ranges. It's as simple as it is. And the first level is around the mid 130s. Above that, we go to mid 140s, and above that, the high 160s. But right now, it's still got to prove itself before it can get to any of those price targets. And the thing to note here is if price breaks down from, in particular, that 98 to 100K level, then we have to reset some of these price targets, which then could reset these price targets, and in some cases might invalidate some of the price extensions to those points because you're getting new lows. That's what we have to keep in mind moving forward with these price targets. And of course, the time frame to the end is getting, well, it's pretty much on point now with the previous cycles. In amongst all that, traders are still making coin, long and short. TIA premium is now closed, but congrats to the guys that made it in before the cap. However, if you are wanting to learn how to trade and invest your portfolio, navigate it through the cycle peaks, this could be for the stock market, for real estate, precious metals. We have TIA Pro coming. Join the waitlist. The links are in the video description. You'll also receive the reports as they come through week by week. And hopefully you can join us and make some of your profits here in crypto, whether it's long or short. So an absolutely fantastic result, amazing investment. The rest is now up to you. So in terms of USDT, it has continued to climb, also putting in lower highs and higher lows on the daily chart. And now we wait for some of the weekly signals. In the past, we've only seen 1 week above the resistance level before it snaps back down. And we've seen that again, 1 weekly close above the resistance, snap back down. Here we go again. We have 4 days to go in the week. Is this going to close above? And then we get another snap down. Ideally, that's where we end up. You can see from the previous low for Bitcoin and of course a top for USDT, week above, week under, week above, week under, and you can just see how this continued to play out before you got this big breakdown. That's, I think, going to be the best case scenario now for Bitcoin and cryptos through this next stage of Q4, where nearly a month down in Q4, and we haven't seen any significant signs of the Bitcoin wanting to continue following this path in Q4. And so I'm always, and in this case very much so, paying particular attention to the divergence I'm seeing now with the Bitcoin predictive cycles, something that we've been following for many, many months on the channel. And it was all going to plan until we got this change in behavior. There was the breakdown, obviously, with the $20 billion liquidations around the 10th of the 10th, so 10th of October. And that brought on the blue line coming back down towards the red line. And through this whole period, we haven't seen Bitcoin come back to that red line. So it hasn't made too much of an attempt to really rally hard to follow what was going on 5 to 10 years ago, even though it had done very, very similar things throughout this entire cycle. And as we see with the S&P 500, it was doing similar things to what it did 5 years ago and has continued on, whereas Bitcoin has diverged here. So we've got to start paying closer attention to that in case this continues to diverge from the playbook that it gave us from 5 years ago. Now, if we line up the lows, basically the crashes to the day counts, so you can see the crashes at those times, the red line, a low, another higher low for the blue line, significant low, and then a lower low, so 2 significant events. You can see that it's relatively on par here, again, until we got to the breakdown of the liquidation day, the 10th of the 10th. Now, don't worry about the date down here because it's going to be different as we've moved the blue line, but that's the breakdown point. And the chart on the blue line has not followed the red. The only way it's followed the red really is in this last few days where it's rallied very weak, but it's still rallied with the red line. And so that could be potentially what we're going to go through next, where any of these rallies that we see on the red line could happen in the blue, but they're going to be less. And any of the downside, any of the corrections on the red line could be bigger. So you're still going to get could get a similar pattern, but it's going to be bigger to the downside, less to the upside when the red line goes up, bigger to the downside, less to the upside, and you start to get this play out for Q4 into December, and then see what happens from that point as we move into 2026 and the other markets, as I'll cover here with the stock market and the real estate cycle. For altcoins, one good day here, nice close above 7%. That's the, I don't know, icing on the cake, or we haven't really had a cake to eat yet, have we? But that's basically the glistening in the eye. That's the benefit, or the best thing we can pick from the crypto markets at the moment, is that we had a nice green day, closes above 7%, and well, hopefully it can continue on. But it's really got a lot of work to do. Not saying it can't do it, but it's just got a lot of work to do in this space of time. The total market cap, this is total 3, has continued to hold above 3.65 trillion. So things are still looking okay there. So it's not all doom and gloom. And total 3, which is your altcoin market, including stablecoins, but basically not including Bitcoin and ETH, still below the 107 trillion, which is at shorter term 50% level. But the bigger point here is that it's still above 950. So when we cover off those charts, others dominance for your shit coins, it's had one good day here. Great. We've got a couple of little high lows. Good stuff. That's at least a base to work from at this late stage. The total crypto market cap still above 3.65. So that's another positive to the whole story. And total 3 is also in a positive space because it's still above the 50% and those previous tops around the $930 to $950 billion. So there is some positives here at this later stage. Now, in terms of the sentiment, sure, we had the day down. Sentiment ran back to fear, down from neutral. So that's, I guess, to be expected on a significant down day. And we had $600 million in liquidations. So a typical day there of liquidations. The long-short ratio is still just a 2% differential. So not really much to go by there either. This one not looking so good. This is your daily exchange volume, which has continued to slump down to 50 billion. Remember, the lows we are watching are around 46 and another one there at 46. So not far off those lows at the moment. So if that's to break down, then we've got lower lows on the exchange volume, which means there is less interest in the space overall. Ethereum double topped at the 50%, continues to slide, but got a couple of higher lows forming here. So again, it's in those rock and a hard place. The market has not given us anything. it continues to squeeze at the moment, and we're just waiting for a sign from the market. And we know what the signs are. We get breakdowns of these lows, most likely coming back to test the 3,400 level, and then the next 50% at 3,200 for a round number, which also gets you to the swing low. So basically every $100, if this breaks down now from 3,900, breaks down the 37, then we're watching almost every $100, 35, 34, 33, 32. To the upside, ETH really needs to overcome $4,200 and hold above that level. It's the 50%. The double top is also just above 4,200. There it is, 4,266 and 4,293. So essentially just over the 43. But for now, it's still just waiting for that next move of the market. In the meantime, ETH BTC has still not recovered the 50% either. So it's still in a slightly weaker position here, as are many of the major alts, even though they had a bit of an update here. So that's a good start. A little bit of an increased volume. Solana BTC still underneath that major 50% level of 0.0018. That was my rather not zone. I didn't want to see Sol BTC break down from that level. Positives, still higher lows, but it's underneath this resistance and that previous swing low that you can see right in there. So it's got a lot of work to do again. And if we take another look at another 50% on the short term, 0.0018. So there's a couple of levels here for Sol BTC to get above in order for it to put in bigger gains than what Bitcoin may do. Or if we have seen a top, I'll leave that up to you to fight it out in the comment section. If we have seen a top, then it's got more work to do to make sure it doesn't lose as much value as what Bitcoin may if the top is in. And one place that we can look for tops, look at that segue, amazing, is the Homebuilders ETF, which we do cover quite often. It is a pretty significant signal of the 18-year cycle, and I make mention of it today because on the rate cut, Jerome Powell comes out, cuts rates, XHB closes down. So this entire time that the S&P 500 has been going up and going up because of AI and bubbles, and the breadth is lessening. You know, there's less and less stocks that are pushing the stock market higher, and people are getting scared about that. We've seen that story before. It happened at the lows as well. So I'm not trying to call the end of the stock market. We're looking specifically at the Homebuilders ETF. It went down. To me, it seems like a bit of a news failure here. Interest rates were cut. These are home builders. Shouldn't they be making more money, more profits perhaps in the next 6 to 12 months if everything is okay in that market, if you've got more properties being built, if you've got land prices going up, if you've got more buyers buying because interest rates have gone down, therefore it is quote unquote cheaper for them to buy. Whatever the case is, at least for this last 24 hours and the down day when everything else, well, at least the stock markets are up, it seems a little strange that this would be falling and closed underneath the 50% level of 105.29. So just by a few cents there. I think the big call is going to come if this low breaks here at 103 and then heads back underneath 102, which was that first swing top before it had that higher low come in. So there's some pretty key points very close away. In terms of percent, we're looking around 2% to the downside, roughly 2.8. So call it 3% down. We're going to get a little bit more bearish here on the Homebuilders ETF, which leads us even closer to this rolling over of the peak and further downside underneath the 50% here at 88, then you pretty much can call it a day, and it's just a ticking time bomb now for the S&P. That doesn't mean that the S&P tops as soon as the 50% breaks on the Homebuilders, right? The point here is that this is probably got less to go and the top is getting very, very close. Just keep following the bubble, keep following the up moves here for the S&P and the NASDAQ if you are trading it. But the thing to do, in my opinion, of course, is not to go crazy in the bubble territory, not to start leveraging out and putting money into AI stocks and all this sort of thing, looking for different sectors that AI is going to spread towards, and you're going to make all this sort of money because this sector is going up and everything else is just having a bit of a hard time. I think it's a ticking time bomb on that particular game as well. Now, the S&P 500 has continued higher, and if we take a look at our 5-year cycle using the line chart for the current year, the red line is the 5-year cycle, your 2020 year, which then leads into 2021, so essentially the 5-year cycle. We can see that there was another peak yesterday, and the next movement is roughly down. Now, I've said many times before, I don't think this is going to be a severe down, like come back to test the lows of that one there. Of course, can be wrong, no worries. But I think considering where we are at this stage, it may just be either a consolidation, basically a grinding move. And if we do get a move down, I don't think we're going to come and break too far from these highs. Let's wait and see. We've got a couple of weeks on that, obviously end of October, and then this low comes in somewhere around 14th or so of November. So a couple of weeks into November, and then it starts to climb out again and just keep running. So essentially a less severe move of that, and the least severe would basically be a grinding move. And while the stock markets are heading higher, the S&P, the NASDAQ, the Dow Jones, hitting new all-time high prices, we still see Bitcoin not making new all-time high prices here. It's continued to lag. And we know that it does lag and then eventually catch up and then put in a top before the S&P tops. But I think it needs to get going here because of the extreme move that we're seeing on the S&P 500. As I've talked about before, I'm still looking towards this, there's only 2 or 3 more days left for the trading week here and then next week. And from that point, we may just be seeing this grind higher for the S&P 500, and it may represent something a little more similar to what we saw with the 2013 peak. So take a look at S&P 500. You've got the grind higher. And then if I turn on BTC here, you can see the Bitcoin topped and the S&P 500 continued to grind higher throughout its entire bear market. So that's Bitcoin in the orange, and here we go, S&P in the green here. It was grinding higher all the way into the low of Bitcoin. And then Bitcoin was consolidating, accumulating, and then the S&P started to roll over at that point. So it was quite a difference in timings of that top. And similar sort of thing here in 2018. Bitcoin topped December 2017. The S&P 500 ran into January, big pullback. Another top here in September 2018. And then another big pullback. Everything else pulled back as well. Bitcoin dumped from about $6,500 down to $3,000. And then, of course, things started to consolidate from that point, and that was the 2021 cycle top. Now, the last thing I want to see is MicroStrategy have any sort of comeback, and this could be almost a video on its own. We've seen it break 50%. The last time it broke 50% was in April through that tariff scare, and it has just broken down in the last 24 hours its major 50% level. When it did this in the last cycle, you can see it had a lower high and then basically collapsed from that point. Maybe we can see that a little bit clearer. That was the prior cycle of MicroStrategy, tops, and then basically started to fade out here. So it doesn't, I mean, if this carries on, well, we've got to come back and test the lows at 240, the lows at 230, and then it's basically a breakdown from that point. Now, I posted about this throughout this entire cycle, just how the timing of MicroStrategy works out, where you get this lower high form, and that has been the all-time high price for Bitcoin. So July 2025 was MicroStrategy's lower high. You can see last cycle, MicroStrategy's lower high was November 2021, which was Bitcoin's all-time high. So that could be what happened here. We had the excitement high, another greed high for Bitcoin. Let's come back. There it is there, July. And the price has gone higher, but we haven't seen the sentiment repeat that. So here is May, here is July. July was the last time Bitcoin hit extreme greed, and each of the following all-time highs for Bitcoin were greed and greed. And between those two, the sentiment did run down into fear. So it could be that we saw the extreme excitement earlier on, March 2024, November 2024, and to a degree of a day, really, you had the May top and then the July top. And the July top marries up well with the MicroStrategy lower high, which was very similar to last cycle. So many things, in my opinion, are pointing towards a top being in, but I don't have confirmation yet on the Bitcoin price. So there could be more at play here, and we just got to keep following it until the bitter end. And the next bitter bite to eat would be a breakdown of 98 to 100K. Wicks and closes above, safe. You know, that's going to be sweet food. But wicks and, well, again, bodies of that candle or bar that are closing underneath that level, that's going to be the bitter bite there. Okay, so let's keep watching how things progress after this interest rate announcement. We obviously have a few signs here that we're probably rounding this top now, Q4 of 2025, and in some cases, maybe that was even 2024 for some markets like the XHB, as I showed earlier, where that topped in 2024. So lots to cover. Don't go anywhere. Like and subscribe. Let's keep following this cycle through the peak into the collapse. See what we can do best here. And if you are taking your trading and investing a little more seriously, like our members here, join the waiting list for TIA Pro. And I'll see you guys over there as well. Thanks again. And I'll be back with the next update. Cheers, guys.